We'll quickly go over FOMC minutes. There's not much going on. You have to understand FOMC minutes is a recap of what happened last time and if there's anything new that came. Nothing new came in. So I'll quickly share my chart. So here, let's go SPX. So I'm gonna clear everything. We're on a 5 minute chart. The minutes came at 11 o'clock. PST time. We basically ripped straight to 4,300, couldn't break that, and basically market closed at the opening range. So what that tells you is buyers and sellers were in agreement. There was a little bit of volatility. The only two things that you need to know is most of the Fed people agree to a 75 basis point increase in September, which we've already taken into account. The only thing the market's waiting for is quantitative tightening. There is a prox budget of 90 billion that needs to be removed in September from the Fed in terms of mortgage-backed securities. If that comes out, let's say Powell, whenever he speaks next, that comes out, that's what's going to drop the market. What a lot of people can't understand is this is a technical run in the market. It's not a fundamental run. Anytime we are over hedged where everyone was on one side, no one was buying calls because people's call got crushed. You're one side and you get a little bit of a buying, those things start getting burnt, and then more people, more funds got in, and we're at a point where, and I've said that to you before, we're at a point where funds are in the pressure that they need to match their performance with SPX. So if SPX is, let's say, positive 15% from mid after 6 months, the funds need to be at minimum that place so they can show at the end of the year that they're performing. And because they're not, they're desperately buying right now. There needs to be a reason for it to drop. It's not going to automatically drop. And so you need to wait for the drop to happen rather than, front running puts, which, like, if you are like, okay, you know what, I'm going to add September puts because um, I think there is a chance you can use some of your profit to do it. But what people are doing, taking their full positions and going short with no long side, that's what's going to take you out. The way this works, and it's always worked, is the market will condition you to a certain behavior. Right now, the behavior is buy the dip. It works till it doesn't. And when it doesn't work, then you're going to have to start shorting. So I'm saying you don't want to be the one that's trying to short the rip every single time. And by the time it actually works, you have no money left. So with FOMC minutes, days like today, I tell people, like, we had 5 plays today, most of them 4 worked out of 5. But I tell people, including my group, days like today, if you can't handle the volatility, just take a day off. There's no shame in saying, hey, I don't want to trade a day like today. It's fine. Like, yeah, you can make money, but what day can you not make money? There's like meme stocks running every day this week. So there's so much shit going. I wouldn't stress too much on days like today. Tomorrow we get the real move. Today, however, though, Mark, we saw cracks in the structure, even though the drop wasn't much, but sellers went aggressive. Apart from that, any comments on FOMC?
Yeah, no, I listened to it and I was watching the charts. It seemed like when the information and data was released, there wasn't much of a change to what he said the
Yeah.
following month, right? Hence the reason why it ended up going up. And I also noticed that it ended up filling the gap. And the minute it filled the gap, it sold off at a crucial point of 4,300, is what you
Yeah.
said. Now, the other crucial point, which last week I think we were talking about this, was a key level we need to pay attention to for the bull run to be real. Wasn't it 4,200 is what we were talking about initially? And it ended up holding
So
4,200 and it ran up.
So there are 3 key events, and SPX has held all of them. One was 4,200. The other was the 50% retracement, which was 4241. We smoked that. The next one was the 200-day moving average. So let me quickly show you what happened. This is the fun part. This is why technical is also important to learn. So we're just going to add 200.
And just so you guys know, this is on a daily chart.
Yeah. So we got and we failed. So that's sorry, here. This was the four. It literally touched it and failed. We need to retry breaking it. Ideally, bear market ends with the 200-day moving breaking. Since 1950, so it's been like the data is about 60, 70 years. anytime we've retraced more than 50%, the bear market's over, right? So based on just that fact, the bear market's over. But there's always exceptions. Will this be an exception or won't? We'll see. In my opinion, it is an exception, and there's more pain coming. But the pain won't stop until everyone's just going short. Like every single day, there's a little bit dip. People get into puts, get smoked, and then the same behavior. That behavior will get corrected at some point, and people will turn bullish. When that happens, and it's coming pretty close to that, what can really get to the drop is quantitative tightening. That doesn't happen, we'll keep going. If you were trading 2020, we had quantitative easing. This is what easing feels like. They're buying right now, they're not selling. They bought 5 billion last week as well.
Yeah. And so because we talked about this with Mark when he was saying that Mark Monroe was saying that he thinks we are pretty much for the upswing now.
Yeah.
So this is very important. We got to see what happens at the 4,300 mark. I don't know. I feel like we're like the only channel still saying be careful that we're going to have a drop, because I'm noticing a lot more people are now changing their sentiment, which is fine. That's what you're supposed to do. You're supposed to change your sentiment. When your thesis changes, then you change. But I'm seeing a lot of people already, as of probably last week or so, thinking that we're now on a bull run again and that we already hit the bottom. The bottom was June, and we'll see. I don't think we hit the bottom yet. That's just me. So I could be wrong.
Most technical traders think it's over, and that's why they're using technical metric. Every macro trader will tell you this isn't over.
Yeah, and I'm looking more on a macro end. But you know what? The good news is, if I'm right, I could refer back to this video and brag and tell everyone I called it, right? That's how you're supposed to do to grow this channel. We call about all the stuff that we did amazing at and ignore all the wrong stuff. So,
yeah, like, and that's the accountability part. If we are wrong, though, we'll do a separate episode just talking about how wrong we were, because that's the whole point of being accountable.
Yeah. Because I see that all the time. I call the bottom. I call the high, and it is what it is. I had this character that I was joking around with, and I've done a few videos with him. He's called the King of Investing, and the whole joke is that he always gives you places like the market's going to go up sometime soon, and the market's going to go down sometime soon. So regardless, I'm always right. So that's the whole running joke on it. But all right, so
most people, Mark, are now, because it's so hard now, they're going from cryptic vague to now hindsight tweets. So when shit's happen, then they tweet about summarizing what's happened to kind of make it seem like it's smart. But while it's happening, no one says anything. So there's a shift in Twitter too. Twitter is getting really toxic because people are just hating on each other. People that were getting shit on for buying coin at 300 are now saying it's up 100%. So they're shitting on the people that are saying. So it's crazy. People, everyone wants to be right. It's a human need. But in trading, you want to make money. Who gives a fuck who's right? You might be right, but if you're not making money, no point being right, right?
yeah.
But on Twitter, it's the competition. Well, it doesn't really matter if you're right or wrong. If you are wrong, you change. If you don't change, market's going to take you out.
Yeah, and I suggest that people understand the difference between like me and Mo, for example. I've been heavier on the investing side than trading. He's more of a trader. So we do see a market in two different perspectives. I also trade, but Mo and I have spoken about this before offline, or maybe we did on this podcast too. I'm not sure. But we have spoken about the fact that sometimes my long-term investment thesis, my mind, it sometimes messes with my trading, because I'm so fundamentally based versus the technicals of what's happening right now. Because as a trader, it's about right now. You don't care about 5 days down the line or a week down the line, correct? You care about right now. How can I make money? Where I'm more like, well, fundamentally, why is this company going down? This makes no sense. This is a good company. But the reality is what I need to start realizing myself, and I've been telling people this as well, who I talk to and stuff and sometimes give advice to. If you are a long-term investor and just care about the fundamentals, the technicals works for you to get good entry points. That's really what it is. It's good entry points. In the end of the day, 5-10 years down the line, down the line, do you really give a fuck if you bought Square at $81 or $150 if it's at